Hello and welcome to Swak Academy. In this video, I will make an in-depth stock fundamental analysis of the company Mercado Libre. I will cover its history, business model, growth, profitability, balance sheet, valuation, and finally do the 3M analysis. So make sure to watch till the end of the video. Mercado Libre was founded in 1999. Its headquarters is in Argentina. The company has an $87 billion market cap. The stock is trading around $1,695 at the time I'm making this video. Mercado Libre is an e-commerce marketplace operating in Latin America, a region of 650 million people. It functions both as a primary retailer as well as a third-party marketplace. Additionally, the fintech division originates credits to both merchants and users in the form of loans and credit debit cards through their lending division Mercado Credito. They launched their own version of Amazon Prime called MELI Plus, which offers free two-day shipping and subscription to Disney Plus and other streaming services. In addition, revenue is generated through advertising on the platform. Mercado Libre and its subsidiaries operate in Argentina, Brazil, Chile, Costa Rica, Dominican Republic, Ecuador, Peru, Mexico, Panama, Honduras, Nicaragua, El Salvador, Uruguay, Bolivia, Guatemala, Paraguay, and Venezuela. Mercado Libre grew its revenue from $557 million in 2014 to $14.4 billion in 2023, a 25x in 10 years, a 39% internal compound rate. So as you can see, this is a growth company with a lot of growth potential. Now let's break down the revenue. According to this chart, the majority of revenue comes from Brazil, then Argentina, then Mexico. So Mercado Libre has a diversified revenue by region. The same can be seen with the revenue categories. The majority come from commerce services, followed by fintech services and credit revenues. So Mercado Libre is very well diversified. South America is politically and economically unstable. They have corruption and high inflation. The diversification will give the company some kind of protection. If one sector or one region is doing bad, the other ones will compensate. Now let's check the profitability of the company. The gross profit is the result of revenue minus the direct costs to create these revenues. The gross profit margin is a result of gross profit divided by the revenue. The gross profit margin shows the amount of profit made before deducting selling, general and administrative costs. The gray line in the chart represents the gross profit margin over the years. It is clear that the gross profit margin have decreased from 67% in 2015 to 50% in 2023. Nevertheless, 50% is a high number, showing that the company is very profitable. Next, let's check the operating profit and the operating profit margin. Operating profit is the net income derived from a company's core operations. It is the amount of money that a company has left over after meeting its operating costs, but before paying its taxes. The operating profit of Mercado Libre is growing and reached $1.8 billion in 2023. As you can see, so is the operating margin. It grew to 12.6% in 2023, which means from every dollar revenue the company make, 12.6% are operating profit. Now let's check the free cash flow. It's good to see that the company is free cash flow positive, since most growth companies invest their cash in growing the company. The free cash flow reached $4.6 billion in 2023, so the company is very profitable and there is enough cash that is left to investors. Now let's check the efficiency of the company. In other words, analyze the operating costs. The operating costs include costs for sales, general and administrative, as well as costs for research and development. The costs are increasing with revenue, however, they are not proportional to revenue growth. The blue line in the chart represents the operating expenses as percentage from revenue. As you can see, the blue line decreased from 2019 to 2023, which means that the company is efficient and can produce more profit for less cost. In other words, the company have a good operating leverage and it will immensely benefit from it with the future revenue growth. Now let's have a quick look at the balance sheet. Mercado Libre has $15.5 billion in current assets. The current assets are the assets that are liquid and available to the company within 1 year. They include cash and short-term investments. The total current liabilities are the liabilities which the company must pay within 1 year. Mercado Libre total current liabilities are $12.56 billion. Mercado Libre total liabilities, including long-term debt, are $15.6 billion. By calculating the current assets minus the current liabilities, Mercado Libre is left with $2.94 billion cash on its balance sheet, making the balance sheet extremely strong and healthy. Mercado can use this money to buy back stocks, invest in the company, or buy another company. Furthermore, Mercado Libre have enough cash to pay the total liabilities of the company, including long-term debt. So the company have a really strong balance sheet. Now let's jump to valuations. Mercado Libre has a 5.47 price to sales ratio, a 76.37 PE ratio, a 24.86 price to free cash flow ratio, and a 25.35 price to book ratio. Pause the video and check how the current ratios compare to previous years. The ratios might seem high, however, this is typical for a growth company that is profitable and have almost no debt. Now let's do a discounted cash flow analysis to determine the fair price and intrinsic value of the stock. This is how my model works. I calculate the worst case scenario to determine the downside, a normal case and best case scenario. The first column represents the growth rate for the next 5 years. The second column represents the growth rate for the 5 years afterward. The third column represents the terminal multiple or the PE multiple at which the stock will be sold in 10 years. The fourth column represents the discount rate or the rate of return the stock will grow over the years. Considering a 20% growth the first 5 years, a 15% the 5 years afterward, a terminal multiple of 16 and a 15% discount rate. The intrinsic value of the stock is $1,451 based on my conservative assumptions. Mercado is trading at $1,695, slightly above the intrinsic value. Finally, the 3M analysis, 1M for moat, 1M for management, and 1M for margin of safety. Mercado has a strong moat. It has an ecosystem that binds client and a network effect. The company have 84 million buyers in South America. It is almost a monopoly. Management have done a good job growing the company and making it profitable. The company is trading slightly above intrinsic value and have a strong balance sheet. Now let's have a quick look at what analysts think of the company. The analyst average price is $1,930, which is above Mercado current price of $1,695. Most analysts recommend to buy or hold the company. In conclusion, Mercado Libre is a great company with a great future. I will certainly invest in the company once it gets below intrinsic value. Let me know in the comment section below what you think of the company and if you are interested in buying it. If you found value in this video, please give us a like, this helps a lot, and consider subscribing. Thank you very much for watching.